Hey, what's going on, traders and investors? Thank you for checking out this video. My name is Travis from Master the Market, and in this one we're going to be talking about when to sell your stocks, and I'm going to go over both when to sell them for a profit as well as when to sell them for a loss and when to kind of move on from that trade or from that investment. So first and foremost, one very important thing about any kind of trading or investing is that it's very important to have a trade plan before you actually enter into that trade. And this trade plan is going to consist of a few things. Two of those things are going to have to do with when you actually sell your stock. And the first is going to be a price target, also commonly called a profit target. And this is going to be the price that you plan on locking in your profits if the trade does move in your favor. And on the other hand, we're going to have a risk level, which is going to be the price that you plan to cut your losses if the trade moves against you. By doing this and by having these prices in mind before you actually enter into that trade or that investment, it's going to kind of take a lot of the pressure and the uncertainty off of the trade, because now you know exactly what's going to happen, you know how much you stand to make if the trade moves in your favor, and you know exactly how much you stand to lose if the trade moves against you. Now, when it comes to actually determining what these prices are going to be for your profit target and for your risk level, most of the time you're going to use some pretty basic technical analysis to come up with these prices. So for example, if we take a look at this diagram here, we can see that there is a pretty clear level of resistance on this chart. And if you know a thing or two about technical analysis, you most likely know that a level of resistance is a level that the stock is going to have a very difficult time breaking above. And because of that, most of the time a stock is going to actually pull back or reverse to the downside from that level of resistance. Now, because of that, it makes a lot of sense for us to sell and lock in our profits just below a level of resistance, so that way we can lock in profits at the high before it does have that reversal back to the downside. So in this case, if we were buying the stock down here at this green dot, at that point we can see that there is already a bit of resistance forming on this stock, so it makes a lot of sense for us to set our profit target for this trade just below that level of resistance. Now, one thing to keep in mind is that sometimes you may only want to lock in a portion of your profits when the stock does reach your initial price target, and that's because obviously support and resistance are not going to work 100% of the time. There's going to be occasions where a stock is going to blast right through this level of resistance and continue to the upside, and if you decide to sell your entire position just below that resistance level, then you're going to miss out on a large part of the run that happens in the stock. So what I recommend doing a lot of the times is locking in maybe half of your profits at your initial profit target, and then waiting a bit to see how the stock actually reacts to that resistance level, because if it does end up breaking out above resistance, that's a very bullish sign for the stock, and then you can hold on to the remaining part of your position, which is of course going to help you maximize your profits on that trade. Now, on the other hand, the goal of a risk level is going to be to place it where it most likely is not going to be reached. However, if the stock does reach that level, you're going to want to cut losses on that trade anyway. So if you think about it, if we have a stock that has a level of support that is forming, one thing we know about support levels is that a stock tends to bounce off of its support level. However, if it does end up breaking down below support, that is a bearish sign for the stock, and it tends to continue downward then until a new level of support is formed. So one very common way that people will come up with a risk level is to set it just below a level of support. So that way, if the stock does end up breaking down below support, you're going to quickly get out of that position, cut your losses, and you don't necessarily have to worry about when a new level of support is going to form. You can simply kind of wait from the sidelines and look to re-enter into a new position when that new support does end up forming. Now again, having these profit targets and these risk levels in mind before you get into the trade is really going to kind of help you take the emotions out of your trading and is going to allow you to be very strategic. However, it is very important to understand that with any kind of trading or investing, things are not always going to go 100% according to plan. So with that being said, it is very important to be able to think on your feet. So I wanted to kind of share with you a few common reversal indicators that I see all the time in the market that may be a really good indication that now is a good time to sell out of this stock, even if it hasn't necessarily reached your profit target, and even if it hasn't necessarily reached your risk level. And the first of those is going to be what is known as an RSI divergence. So the RSI is an indicator that goes below your chart, showing you when a stock is both overbought and oversold. And this can also be used for other things such as RSI divergences. And what we're looking for in this case is going to be a bearish RSI divergence, telling us that the price action is going to become bearish. So now is a good time to sell out of our position and lock in our profits or cut losses on the trade. And what this is going to look like is a higher high in the stock as well as a lower high in the RSI. So if we take a look at this chart here, we are looking at the 5-minute chart for the stock LGVN. So because this is the 5-minute chart, this would probably be an RSI divergence that you would use for a shorter term trade such as a day trade. However, you can also spot these on longer term time frames like the 4-hour chart or the daily chart if you're doing longer term trading or longer term investing. Okay, and like I said, what we see with this bearish RSI divergence is that the stock is making a higher high, and we can see that here is the initial high. This high is going to be slightly higher. And at the exact same time that that is happening, we see that there is a lower high in the RSI. That is what this RSI divergence is going to look like. And once you see this start to form, so after this second high is formed over here and the stock is starting to pull back, that's when you can kind of determine that this is a good indication to sell the stock. So that way you don't have to hold through this big pullback that happens afterwards. And let's say that this is in between your profit target and your risk level. The nice thing about this is at this point you can lock in some profits still without having to kind of watch the stock and wait for it to come all the way back down to your risk level before you end up having to sell out of the position for a loss. And another reversal indicator that we see all the time in the market that can be a really good indication to sell out of your position is going to be when there is a breakdown below the VWAP. The VWAP is another indicator that we can put on our charts, and this stands for the volume weighted average price. And more specifically than just a breakdown below the VWAP, what I personally like to look for is going to be when a stock closes a candle below the VWAP, as opposed to a stock that is just very quickly breaking below the VWAP and then bouncing back above it. So again, if we take a look at this example, this is one here for Apple. The VWAP is going to be this purple line that goes through the middle of the chart. And other than some choppiness that kind of goes on at the market open for this example, the first candlestick that actually closes below the VWAP for the day is going to be right about here. So this is going to be our reversal indicator. This is telling us that the trend in the stock is kind of shifting from an uptrend into a downtrend. And that's going to be a good indicator to sell, lock in your profits, or cut your losses if you need to. And as you can see, after that breakdown below the VWAP happened, the selling really kind of started to pick up and we started to see a pretty big move to the downside happen, which of course we obviously would want to avoid holding through if we did have a position in the stock. Okay, so with all of that being said, hopefully this gave you a good idea of when you can sell out of your positions in the stock market. Obviously, there are of course a ton of different ways that you can kind of take this. You don't have to necessarily just use levels of support and resistance for your profit target and your risk level. And there are, of course, plenty of other different reversal indicators in the market that can also be a good signal to sell out of a position. However, hopefully you found this video helpful. And if you did, please make sure to give it a like and subscribe to the channel so you don't miss out on future videos. And if you want to learn more about day trading, swing trading, and investing, make sure to check out the programs on my website, Master the Market, which is going to be linked down below in the description. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.